Welcome, everybody, to Wall Street Reporter's next Super Stock live stream, where we bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities that are now at a key inflection point and with multiple catalysts in place for that 10x. And that brings us back to ADTX and Amro Alban, the CEO. Amro, welcome back to the program.
Good to see you again, Jack.
Amro, so look, the big news is this. Again, one of the things that we look for, one of the things that we want to have with, with our 10 baggers, the key, the system is we got to have stocks that are at the inflection point, because that's where all the money is made. And here's the thing, what's exciting about Aditxt, the stock fits into, all our criteria that we look for in our, the 10 bagger system, which has produced so many stocks that have gone up 10x, 100x and more. And that is one of the big things people need to understand is cheap valuation. You got to get in at the ground floor, and it doesn't get cheaper than the Aditxt. The stock is trading at a $4 million, $3 million market cap today. Now the stock is increasing like literally as we speak. We hit a low. There was, I think, a capitulation. Investors, I think the problem is people don't understand the model, and people have kind of, the stock has been through many cycles. People have given up. They don't understand the model. And that's exactly when the big money is made, when everybody gives up and the company's just, again, at that inflection point. How do we know? How do we know the company is at the inflection point? The news flow. And the news, the big news, which I think most people missed, is, you signed with Spartan Capital to be the underwriter for the Pearsanta IPO. So Pearsanta, which is one of your three companies that you're building, and we'll talk about your strategy. We're going to get into the strategy, which, Amro, we got to explain the strategy, because I think the market, that's probably why the stock is cheap. People haven't caught on yet, but I think they will. I think they're going to catch on. This is the moment. So this marks the news about Spartan Capital doing the IPO, which is going to be a major, you want to call it a liquidity event, monetization event for Pearsanta. But that totally validates the model. That itself can make the stock a 10x. I'll explain my analysis later, but it's a big deal. So, Amro, enough about me talking. Let's
explain the model in very simple way. It's acquire, build, capitalize. And the innovations we look for innovations that could address some of our most pressing health challenges. Period. And today, since we're talking about Pearsanta, we're talking about cancer. Everybody understands the significance of cancer, and we'll talk about it by the numbers. But basically, Aditxt was founded to identify these big innovations with big potential, build them in-house, and capitalize on the opportunity at the right time, just like what we're doing with Pearsanta as we speak.
And here's the big thing. By the way, this is interesting. We have a bunch of people watching, and I just saw this comment from Keith. Now, Keith, I know Keith has been following. I think Keith, or it's another guy, but I think it's Keith, that he's been following our channel for probably 5+ years, and he's seen the stocks just like Aditxt. They came out a little bit early, and people gave up a little bit too early, and then all of a sudden they end up going up 10x, 20x, and even 50x. So again, I think we're at that stage. Let's explain. First, I want, for people who don't know, let's talk about Pearsanta. What does the company do? And then we'll talk about the other parts. We'll go through the business model. But first, again, Pearsanta, what does the company do exactly?
Right. So let's quantify cancer by the numbers. I mean, everybody understands cancer. Everybody has dealt with it directly or indirectly, but let's talk about it by the numbers. And we will begin by 50% of cancers, half of cancers are diagnosed too late. Half. 70% of cancer death can be prevented. So imagine, when we're talking about 10 million people annually, half of which are diagnosed too late, and 70% of cancer can be prevented by early detection. What that translates to, Jack, is $1.2 trillion economic opportunity, secondary, of course, to the lives that we're wasting. So nobody can disagree with the potential opportunity of addressing cancer via early detection and eventually prevention. But we're starting, of course, with early detection with prostate cancer. And those are the numbers. When you're talking about 70%, more than half can be prevented with early detection, I think we can all understand and capture the opportunity of what it means to begin going after early detection.
Okay, so let's talk about how does the technology work. I think what's also very important, I think, which we talked about, I think, offline a while back, is Spartan Capital, that's the underwriter that's going to be handling the IPO. I think the banker involved in the deal, he actually was involved with Pearsanta. I think in some capacity. I think they invested in the stock.
Actually, with the original company that we acquired its asset with MDNA Biosciences.
Okay.
An individual, not the bank, an individual was actually involved, and that's how we.
He himself. Okay, yeah, he himself. Okay. Yeah, that's a validation.
Mitochondrial DNA truly is key to understanding our health, and basically we're looking at mitochondrial DNA to detect damage that could tell us whether someone has early or whether someone has cancer, but we use mitochondrial as a way to early detect the disease, and that's the key.
Okay, so the technology platform, it's based on analyzing mitochondrial DNA.
That is correct. And look, you can come up with all the innovations in the world, but if you cannot deploy it in a logistically feasible manner, economically feasible manner, then it's not going to matter, right? With Pearsanta's mDNA platform, we're talking about non-invasive blood test that basically examines the mitochondrial DNA of an individual, starting with prostate cancer, and the plan here is to move forward with lung cancer, ovarian cancer, breast cancer, and other types of cancer. But the first commercialization we're targeting end of this year, Q1 of 2026, starting with prostate cancer. So we're not years away, we're months away.
Okay, so I guess you answered, I think we answered a question from Tomei, which is, okay, this is a blood test analyzing mitochondrial DNA. And commercialization is starting, you're saying, this year, 2025.
The team in Richmond, Virginia, which is a CLIA-CAP certified, accredited laboratory and monitoring center, is working on validation of the first two exams. Actually, we have prostate cancer as well as endometriosis. Endometriosis is not oncology related. It is for women's health, but we're starting with these two exams. So Pearsanta really transitions from promising science, promising innovation to commercialization, and that is key inflection point for us, Jack, because we acquired an asset, we built it, we set it up, we made it operationally possible, and the goal here is to launch the first test end of this year, Q1 of 2026, starting again with prostate cancer and endometriosis. That is what Aditxt needs to accomplish, what we need to show, that a model is in action. The IPO for Pearsanta is intended to fully scale the commercialization of Pearsanta beyond prostate and endometriosis and beyond, obviously, the US, Europe, basically take it globally. And that's why 2026 is a very important year for Pearsanta as well as Aditxt.
Okay. So look, the diagnostics market is multi-billion-dollar market. Cancer diagnostics, again, multi-billion-dollar market. I should have asked ChatGPT what is exactly the size of the cancer diagnostics market. So I can't do it now, but if somebody in the audience is watching, ask ChatGPT size of cancer diagnostics market worldwide. I'd like to know. I think it's in the multi-billions. Question I have for you is what are you competing with? Like what are the currently this kind of the what is the market like right now? Like what are you competing? What will Pearsanta be competing against in terms of your technology uses mitochondrial DNA? Does anybody else use mitochondrial DNA? How accurate is it, or what are the benefits compared to other methods? and what are you competing with, and like pricing wise, so we can understand the kind of your competitive advantage that you have over here.
So one scientific competitive advantage using mitochondrial DNA, and as I mentioned, mitochondrial DNA is truly going to show that it's key to better understand our health. That's number one. Number two, when you're talking about economically feasible, we're talking about cost that is in sync with existing costs in the market, and easily deployable because we're using existing PCR equipment to actually to conduct the test. So we're not using infrastructure that is proprietary to us. We're using existing industry infrastructure, and that's out of our Richmond, Virginia laboratory. And again, I mean, look at PSA tests right now for prostate cancer. Over treatment, right? It's unnecessary. Just because you have high levels does not mean you necessarily have cancer, and that leads to over treatment. So just starting with prostate cancer will begin to show how mitochondrial DNA is more accurate, more precise, logistically and economically very feasible to deploy.
Okay, so this is a game changer. Okay, so we just had some audio. Okay, so by the way, we got okay, in the audience we got some people who so C++, one of our longtime audience members, he says cancer diagnostics market today over 110 billion, closer to 150 to let's just say $100 billion. Okay, and this is from ChatGPT, and this is not me saying it's ChatGPT knows. 150. Whoa! Look at these are big numbers. These are huge numbers. Okay. So this. Let's say the numbers. I'm actually shocked it's this. I thought it was smaller. Okay. These are huge numbers. Let's just say it's north of 150 billion. So it's north of 150 billion, and your technology, mitochondrial DNA, could be, a major game changer. You're saying it's more accurate. Now you have anything that proves that? How do you get the market how do you get the medical community to come on board? Is there anybody else doing mitochondrial DNA? Like
So one, we're working on the validation as we speak. That's really important when we're talking about validation, and we're validating against existing tests. MDNA, prior to our acquisition, they did have scientific paper published online as far as the mitochondrial DNA and their particular tests. And again, that's why it's important for us to complete our validation this year as we speak, to be able to go out commercially and with the published numbers. But as far as the market, I mean, look, we're looking at the markets right now from the audience. But look, we even prior to our acquisition, MDNA had their own distributors in Europe that were interested in taking on the test. So our focus right now is to make sure that we advance the validation, we make sure we can back up our claim and go commercially. So the key here for us is this test. And I lost you there, Jack.
Yeah, I think the audio, I think we just dropped. I think your connection might have. So can you repeat? So MDNA, they were pick up where you were going with that. I think you're talking about Europe.
So commercially speaking, there is no doubt that a test that can early detect cancer, that can be deployed using the existing infrastructure, and is in sync or even better economically when it comes to economics, as far as cost and as far as price point. Those are the three key points that we believe we can meet. So it works with existing infrastructure, so you're not looking for proprietary equipment to run it, and it is in sync with the cost. If we can show the market these three parameters, which we believe we have, if we can show by end of validation that we have these three, and we'll begin deploying commercially, we will have the demand for the test, which again, we believe we currently have the demand for the test. So for us, the team is focused on finishing the validation so Pearsanta can transition from pre-revenue to a commercial stage company and revenue generating company.
Okay, so three things. Okay, so how will your price compare to other, the current kind of standard of care?
It will be within the current standard. That's the key. That we are not going to be a higher price point or a higher cost.
Okay.
We believe we will be able to price it within the existing reimbursement.
But the big thing is that it's a blood test and it's going to be more accurate, right? So this is the thing that you have to validate. Like, how much more accurate is the question? Is it 50%? How much more accurate? You're gonna have to. When will you be able to prove that? Do you have numbers right now you could talk about?
And we're going through validation, right? That's what we're doing right now as we speak. But the key for cancer is not necessarily just more accurate. It has to be earlier detection. I mean, that's
earlier.
Earlier.
Okay.
Earlier detection. So back to that percentage where 70% of cancer death could be prevented if it was early detected. Think about that. So not just about precision, it's the timing of detection that would make the difference.
Okay. That's big value driver, as they say. So how much earlier can you show?
Can I just share with you the vision of Pearsanta truly when it comes to,
please.
I'll say this. I know you and I were talking about it before this session. I got to keep remembering to look at the camera. I keep looking at you. So look, we're all familiar with 23andMe and Ancestry.com and all that, right? You can basically download the app. You can get a kit. You can send a sample, and you get your 23andMe, your ancestry report, right? And I've done it, but reality is you really only need to do it once, at least from my point of view. I mean, once you know your DNA, you know your DNA. Now, imagine, instead of just looking at this as a medical thing where, something happens, you go to the doctor, you go to the regular exams, you do your labs. Imagine if we have regular testing on your app where you're receiving a kit, you're doing your blood. And again, I'm not saying, to be clear, that's what, we need to do all the regulatory work. But imagine when you're able to receive a kit at your home every 6 months, every year, every 2 years, depending on the test, and you have your blood sample being shipped for monitoring for cancer. Imagine what Pearsanta could be in terms of contribution to the disease and in terms of the economic opportunity. That's where Pearsanta is headed, and that's where we're positioning Pearsanta, that this does not become a medical exam. This becomes a monitoring to look at early signs of cancer.
Okay, so this is something you could do at a home base. Is that what you're saying? This is going to be an at-home kit?
Not yet. We have to have the right regulatory. At least we're talking about not the test. It's not processing the test. I'm talking about providing the sample. With 23andMe, it's saliva-based. You send it, right? So the key here is, imagine if we have a kit that gets shipped and people can do their own blood draw, send it to the lab, send it to our monitoring center, and come back with the results on your app.
How much blood do they need for the sample?
So without getting into all the technicalities, that's what we need to work out. But this is where the audience need to understand the bigness and the big opportunity for Pearsanta, where, yes, doctors, hospitals, all of that. But ultimately, I know you and I, and I'm sure I speak for the audience, and I'm sure I speak for people that are looking at it. Imagine for yourself, your family, where you're able to do this regular monitoring seamlessly to monitor for early signs of cancer. That's the opportunity we're seeking with Pearsanta.
Okay, so basically, the real advantage is earlier detection. Now, now what's interesting, I was just saying is, so Spartan Capital, it's going to be the investment bank doing the IPO, and they're one of the lead bankers in the deal. He actually personally invested in this, I guess, the prior. So he's invested in this deal prior company.
They were involved with it. They were involved with the I just without really, but they were involved, and that's how we got reintroduced to them. They were involved.
Okay. So that's a big deal. So they're very familiar with it. So now they're actually, I guess you could say doubling down. They're making a commitment here. And that's a big deal. Okay, I think what's interesting. Okay, so for investors, there's a couple of takeaways. So again, it's a massive market opportunity. I think what people have already said it's north of $100 billion global. I mean, we've seen numbers 200, huge numbers. We got huge numbers in the space, and Pearsanta is just getting started with prostate cancer and going into other diseases. Again, using this mitochondrial DNA technology for, I guess, earlier diagnosis of disease. So this is, again, big deal. The question is, how fast, can you scale up, and when it comes to the commercialization phase. So the IPO, what's kind of the timeline? What's their timeline? When do they expect that to happen?
So our goal is 2026, and our goal is early first half of 2026. That's our goal.
Okay, so let's call it next. What are we already in August? So we're talking about 6 months, roughly 6 months out.
Market conditions, big deal, but
right.
Obviously we have to consider market, because we also don't want to go out undervaluing Pearsanta. Look, I mean, we do not want to go out undervaluing the company. We believe in our innovation. We believe in our team. We believe that we have the infrastructure, and we don't want to go out just so we can raise, enough money to, what I call survival money. This has to be growth capital and brought in at the right valuation that reflects the potential opportunity for Pearsanta.
Okay, so this is, and here's the thing. So let's say the deal comes out. Again, what I find very compelling about your model, which something we talked about in one of our first live streams, is look, we've seen this type of business model you have work out very well, where a company, they have this buy, build, and monetize strategy where they, again, we've seen this with Interactive Corp, IAC, Safeguard Scientific, a bunch of companies, and they've all created like literally billions and billions of dollars in value. The stocks went up not 10x. They went up literally 100x or even more. I think Interactive went up maybe 200x over, not in 1 month, over a period of years. Safeguard Scientific, I think, was a more than 100 bagger. I think there's a couple of other companies that are doing this. But the idea is, what makes it very compelling is, okay, you have this portfolio of assets. You identify these assets, you acquire them, you build them up, and then you monetize them by, let's say you spin them out as an IPO or something else. And that company, so Pearsanta, will have its own independent valuation. And let's say in the IPO, it works out, you get a valuation of Pearsanta of, let's just say it's 50 million, okay, which, let's say the thing gets to 50 million, and Aditxt retains half of it. So Aditxt share of just that, and by the way, when we say 50 million, we're saying early on. I'm not saying, this could be $1 billion company, but early on, let's call in the first, 12 months, 6 months, it could be a 50 million valuation. If Aditxt is 25, your 50% is worth 25 million, that means the stock, Aditxt should be worth north of 25 million. Today, you're trading at 4 million. So, or 3 million. So you got an 8x, 800% upside just from that one aspect, one portfolio company. And you have two more of these in the pipeline, two more, monetization or, liquidity events, if I should say. I'm looking for the right word, because some of it you're holding on to some of them for longer. But I think once the market kind of figures this out, they're going to realize you have essentially Aditxt. You have an opportunity to create, a couple $100 million in value in the stock in Aditxt alone. So even if it's 100 million, that's like a 40x from here, or 40x. I mean, the stock, which means, it sounds like a big number, but that's a $40 number on the stock. So again, you got two more deals. They both obviously have to work for this, and I'm sure you have other potential opportunities in the pipeline, but you also have, I don't know if we're going to have time to address, you have Adimune, which is the biotech business that you have addressing autoimmune disorders. That's early stage. That's also could be a game changer. And then you're in the process of acquiring Evofem, the women's health company, which is doing 20 million in revenues. And again, potentially that could be a 5x, 10x multiple. Once you get that kind of optimized, which means that could be a $100, $200 million business for Aditxt. So again, there's multiple shots on goal for this thing to be more than a 10 bagger. And I think the market, once people realize,
the market will be looking for proof of business model. Once we get to the point where we can show that a company was acquired, built, and we capitalize on the opportunity, I believe we will begin attracting fundamental investors, and we will begin attracting attention to the story. Right now, our stock is speculative, right? It's been up, down, penny up, a few pennies down. But reality is, look, Jack, ultimately, we all want, as the CEO of the company, and we all want our currency to be strong. That's a fact. I want our stock to be 10, 40, 100, $1,000, obviously. But the real question is, what I focus on every single day is to keep pushing the business forward. That's what we must continue to do. And then the question is, do we have something real? Do we believe we have something of real value? Early detection of cancer. We just talked about all the numbers. When you talk about 70% of cancer that can be prevented through early detection. When we're talking about a technology that, our goal few months away from commercially launching the technology and expanding beyond prostate cancer and endometriosis. When we're talking about, again, our vision beyond just the medical establishment, hospitals, doctors, where we ultimately can actually bring the kit to home and make it easy enough. I saw one of the comments as far as blood draws. Absolutely right comment. But imagine if we're able to get, to the point where a kit is being sent home for a blood draw and sent back for ongoing monitoring. So now we're not talking about only one-time test. Now we're talking about a lifetime test, a lifetime monitoring. And, to use the analogy of 23andMe and other ancestry, it's a one-time thing. At least, from this general conversation, it's a one-time thing. Once you know your heritage, you know your heritage. But imagine an ongoing test for each individual throughout their lifetime, from the day they're born, right, and throughout their life.
So recurring revenues. Potentially there's because there's going to be a market. What's interesting is this. I think there's a whole new. I think you're in the right space at the right time, because you have this whole, and I think we're just at the start of it. You have this this biohacker movement. These guys are leading where they take all sorts of tests on a regular basis to optimize their health, because there's a bunch of people, who want to live forever. They want to live.
Look,
they see the value. And I'm seeing there's a bunch of companies. I'm seeing there's a new business model in the medical community, because I just saw where they basically it's almost like a concierge program where you pay, I don't know, $500 a year, and every 6 months they give you a panel of different blood tests or whatever it is, and it's a subscription model. And this is
health by the numbers. You can't treat something that you don't understand. You can't treat something that you don't know about. And if you begin to understand your health by the numbers with more precision, right, and higher accuracy and timely, because it doesn't do anyone any good if we tell someone you're stage 4, right? Too late. It's, the timeliness of such tests is so critical. And that timing, again, you really can't achieve that timing just with innovation and science. You also have to have a subscription monitoring model where, you're not finding out too late or only when you feel something. That's exactly where Pearsanta is headed. And that's the vision of Pearsanta. And that will hopefully begin to, to show the, the value, the potential value of Pearsanta and how it may reflect on Aditxt.
Yeah. So this is No, it's a big deal because we're just starting to talk about the business model, but this thing has it's got a potentially a very, very big runway here. Again, once the thing is this, you mentioned this, it's the market. You have this model, you've had it for a while, and the market's kind of waiting to see, okay, when is Aditxt going to show the first that first monetization event, the first liquidity event, and it's going to be, it looks like it's going to be Pearsanta, and it's happening now. So this is no longer, let's talk just a snapshot. How long has Aditxt been public? Like, is it always had the same model? Like, how
5 years. 5 years.
5 years.
Yeah,
okay.
We went public in 2020.
Okay, and with this model, right? Like, I'm not familiar with the early, but it was kind of the same business model, yeah.
Yeah. No, I mean, we founded the company privately. It took us 3 years to go public, and the whole concept, which by the way deserves another session, not today, why we founded Aditxt with multiple innovations in mind, and why we went public with the company to make sure that we have social participation in these innovations. But let's not take away from that. I think that will deserve its own session at the right time when we're looking and when we're discussing how we envision scaling the model beyond Pearsanta, beyond Adimmune, and beyond Adifem with the pending acquisition.
Right. So the big thing is this, and I think this is kind of, again, one of the big opportunities, and it's something we talk about in the 10-bagger blueprint. Again, I'm not here to sell books, but what we found is the big opportunities exactly in companies like Aditxt. I mean, there's a reason why we focus on companies that are kind of in a similar pattern where they have the right model. The market just they come out maybe a little bit too early, or sometimes it's an IPO, what we call an orphaned IPO, where they get the investment bank takes them public, but they don't have any they don't have any retail support. They never develop it, right? So the market just forgets about it. The stock drops 90%, and then finally a couple of years later, the model is working. The model achieves validation. And that's the inflection point. That's when all the money is made. So we want to get into these stocks at that inflection point. So not early on, because sometimes I don't know. It's because a lot of times it's kind of most companies are kind of these startups. Everybody goes through the very same cycle where they come out, everybody's excited, but then it's kind of like we always show that path to like investors. They think, okay, the minute they buy a stock, it's going to go to the moon. It's a straight path, and it's not. It's a roller coaster ride. The same thing when you're building a business. When you're building a business, it's actually much harder because you actually have to do the work. And it's not a straight path. If it was easy, everybody would be Elon Musk. I mean, even Elon Musk had to go. He almost went bankrupt, I think at least three times. I mean, Tesla went bankrupt, I think, almost 3 times. His other companies, I mean, he was basically in 2008. He had I think SpaceX, a couple of other things. Just like basically, you're like a public Elon Musk, because he also has multiple shots on goal. He's got, I think, SpaceX, he's got 5 companies, boring, thrilling, holes underground, all different stuff. And he was doing all that in 2008, and he almost went bust. And he actually made the turn, and now everybody's, the guy's a genius, and now everybody but everybody was saying the guy's a scammer, he's gonna fail, everybody hated the guy. Even I think maybe 5 years ago, in 2018, there was a big shorting campaign against Tesla. Everybody was saying it was gonna go bust. It was a scam, it was a fraud. And look at it now. Now the thing, is 100. The guy's worth 100 billion. I think he's 100 billion. 200. The numbers already doesn't. It's irrelevant whether it's 100 billion, 200. But same thing here, right? The money is made. I think what investors need to understand, the opportunity is when you have this inflection point, where after the company had the right model, is going. They're executing. The company keeps executing, moving forward. But the market, the stock, investors just naturally give up because they have no attention span. The investors don't have that attention span. But now that you're finally at that inflection point and Pearsanta is that event. this completely validates the model. There's going to be, I think there's going to be this aha moment. All of a sudden, the market's going to wake up and they're going to say, wow, now we get it. Now we understand how this thing could be, $20 or $50 stock based on the model, based on, what they have right now in the pipeline with Adamune, with Evofem, and of course, Pearsanta. People are going to get it. It's going to take a few months, I think. But I think right here, it's, again, a ground floor opportunity. And again, look, we don't give buy-sell advice on this channel. And this is 100% a very risky stock. It's very speculative. It's, it's public venture capital. That's what this is. But you're getting in. I think the key thing is you're getting in at a valuation of $4 million. And it's almost like what I call a built-in profit, because, the comps in your space, if you have to sell off the different pieces of the company, it'd be worth, I think, more than 5 million. I think it'd be worth probably 25 million plus. So you got a built-in 5x right there. And then you have all the upside. So it's an incredible opportunity for investors. Amr, what's next that we can see that it's actually working? When will we, what kind of news flow can we expect regarding Pearsanta, regarding the IPO, the upcoming IPO? What kind of news flow could we expect to see over the next weeks and a couple of months?
Yeah. So look, I mean, as it really is a matter of keeping our stakeholders updated on meaningful milestones. So those meaningful milestones, just like any other IPO process. One, I believe, other than the IPO, the validation progress, that's going to be key for us. An IPO, when filing becomes public, it will be public. And, and then as far as timing, it will obviously have to be, market condition dependent. But those are the milestones that we can, and we have been updating the market with is the filing, when the filing occurs, when that's public, right? And of course, as soon as we get into this IPO territory, Jack, as you know, and you appreciate, there are certain restrictions that we have to comply with. But what I would say is, look, the IPO process is going to be public just by its nature. Whatever it is that we need to file publicly will be filed publicly. I think the key for Pearsanta is to update, our stakeholders with meaningful milestones, especially when it comes to validation and commercialization activities.
Yeah. So again, we have a question. Okay, so when is the IPO of Pearsanta? So you said this is going to be what?
Our goal again, approximately can't, but right now we're targeting first half of 2026, but 2026 in general, that's our target. Okay.
So it's it's in the pipeline. I mean, you got the bankers engaged. So it's moving forward. You got other events happening with Pearsanta. Again, the validation. Okay, this is interesting. Okay, so when can we see? Okay, so the results of this. What kind of trials you're doing? What to validate the that it's that it's more accurate, and earlier detection. When will we have that information?
So that will be around Q4. I mean, if we're targeting end of the year, beginning of Q1, this Q4, right? I mean, that will be, as we move forward, either end of Q4, beginning of Q1 is our goal to go commercial. By then, of course, we'll have to have validation results. And assuming those validation results are the right results, that means we'll go commercial. And we just announced publicly that we were invited by a program at the DoD to submit for a study for ovarian cancer. So those who haven't seen it, I encourage you to go look at the press release that we put out. I think it was just a couple weeks ago. So we're working on multiple threads, obviously beyond the current prostate cancer test.
Yeah, I think one of the things is, look, the reality also is we've been in kind of a bear market for like biotech, healthcare, early stage stocks for a couple of years now, and in a normal market, even like let's call it like 2018, like just more or less a normal market, Aditxt would be trading at, I don't know, let's call it at least $20 million valuation, 15, 25 at the very low end. But because we've had, this biotech bear market, it kind of takes down a lot of these stocks. So, and I think we're at the bottom of that cycle. I think we're definitely at the bottom of that cycle.
Companies, Jack, that survived really the last couple of years, 3 years, I believe they'll come out of it on the other end in a much stronger position. I mean, look, again, I think we continue to repeat this is high risk speculative venture. We continue to repeat that, but the last 2 to 3 years, I mean, look at how many companies got delisted, right? How many companies went out of business. So yes, it has been very challenging market, but look, companies with the right business model, the right products, the right services that can and did survive this period, I believe will come out of it on the other end much, much stronger.
Yeah, no, it's again, it's like you said, it's always the cycle, every cycle turns. And I think the biotech cycle is, probably, it's if it's not going to turn the next few months, it's going to turn, 6 months. But we're definitely at the bottom. It can't get any worse for biotech than it's been. So any company that's around now that makes it is, I think is going to be 5x higher when it turns. That's the way it always works. Every biotech cycle, after the market after the crash like now. When it comes back roaring. And we see, if you look any day of the week, you look at the stocks that are, up 200% or up 500% with massive volume. It's always biotechs or healthcare companies that have had some, major news, at an inflection point. And you have some of those catalysts built in, which, could pop at some point. Whether it's Adimune, whether it's Pearsanta, you have those things built in it. And again, it's always the key thing for me is the valuation. This thing is, $4 million, $3 million. Well, I don't know where we're at today, $3 or $4 million valuation. It's dirt cheap, and it could easily be 5x, 10x from there. So okay, so we talked about Pearsanta. I just wanted to have you back on because last week we had the news about the engaging Spartan Capital for the IPO. Maybe people missed it, so it's important the market we get it out there. Next up, we got to talk about again, I want to have you back on every few weeks to talk about different facets of the company, the different things you're doing. So we haven't talked about Evofem yet. Maybe we'll do that maybe next week because that's another major value driver. $20 million women's health business that you're in the process of acquiring. That could be worth $100 million plus under your umbrella. So a lot, again, multiple shots on goal here. Let me see if we have any questions. We talked. I think we just touched a few questions from the audience. So if anybody has any questions, last couple of minutes before we wrap up. Amber, while we're waiting to see if we get any audience Q&A, what I always ask the same thing. What else? What can we expect news flow wise next couple of weeks? We're obviously last. Oh, here we go. Okay.
Adimune,
do you have any?
to me?
No. I think what he's asking is in the pipeline as potential acquisitions. What else do you have? Because you have three. You have three now.
We have two currently, which is Pearsanta and Adimune. We have pending acquisition, which is Adifem/Evofem. And look, our model is currently attracting some attention with potential assets, potential innovations. I mean, look, many companies around the world that maybe holding something of significant value that we may look at. We're again, when the right time comes, we'll certainly share more about potential acquisitions. But right now, we don't really have anything material, other than the fact that look, many innovations exist all around us, and I truly believe there will be no shortage of good opportunities.
Yeah, I think look, the key thing is I think which is is pretty obvious, is you have a pipeline of potentials. I'm sure you're talking to people, but you really can't do anything right now this week, because where the stock is, your currency, you don't have a currency to use really, unless something really incredible. But and also I think it would be good to actually get one of these things under your belt, whether it's closing the Evofem deal, getting the Pearsanta IPO, actually maybe getting the registration statement filed. People need to see that it's real. They need to see, okay, it's happening. They need to see the signal. Okay, it's on. It's definitely happening. They're getting closer. We're getting closer, but it's not
the best way to summarize it is exactly what you said. Exactly what you said. Look, we gotta close the Evofem transaction. We gotta advance the IPO of Pearsanta and the commercialization of Pearsanta. And the way I would put it is, I believe there will be no shortage of opportunities once we show those successes and have stronger currency.
And here's the thing. I mean, just to summarize, this is like a classic, venture capital setup. All of our stocks, the 10-bagger blueprint, our formula is this. You want to get in at the ground floor, right? Everybody always says, "Wow, that stock that went from $1 to $1,000." Like one of the, I keep talking about the stock. We've had a couple of stocks that went up more than 100x. We had a stock called Taser. It was, and nobody believed it. Everybody thought it was a scam. It was $1.25, $1.50. That was the guys who do the tasers that the cops have, the tasers, and now they do the body. It's called Axon. They changed the name. Everybody thought it was a scam, right? And the stock was $1.25. Now the stock is 800 and change. And I think they did a couple of splits since then. It's been many years. But if you would have put $1,000 into that thing, then you'd be sitting on for every $1,000, basically you would have made over $1 million. That's a crazy number. For every $1,000, $1 million. And this is not a crazy tech thing. It's not really a tech, it's not really a high tech company. And everybody always says, "Wow, I wish I could have gotten in at the ground floor." But nobody wants to get in at the ground floor. And the opportunity is always when the situation is at its worst. That's when the opportunity is there. When you have validation, when you actually get, when the picture comes into focus about that, okay, the IPO is happening, the IPO closed, the Pearsanta is now trading at 100 million valuation. By then, Aditxt is not going to be $1. It's going to be $10 or $20 potentially. Again, I'm not saying it's going there, but listen, if Pearsanta is trading at 100 million valuation, I don't see any reason why Aditxt won't be trading at $10 plus, or 20 based on its holdings. It's just a question of math. So, but you're taking a risk. It might, for many people, this stock is not for everybody. It's a high risk stock. This is when the maximum risk is right now. As this thing becomes de-risked, as you execute, as you produce the results, as the IPOs come out, as you monetize, there's going to be less risk. But that also means, because there's less risk, the stock is going to be trading a lot higher. Whether it's $5, $10, $15, I don't know. But it's definitely going to be less risky when the stock is going to be $5. But you would have missed out on, or $10, but you would have missed out on the sweet spot. So,
well, we're certainly going after the right opportunities. And just to quickly answer to me here, yes, the third company, the pending acquisition, is Evofem. That, assuming we have successful closing, it will come under our subsidiary Aditxt, which is focused on women's health.
Can you talk about Evofem just a little bit, because we haven't talked about it yet. Most new people watching, they're not familiar with it.
Actually, so Jack, I think Evofem really deserves its own segment. If next week works, it would be great to actually share a lot more information, because Evofem is doing a lot of great work and expanding beyond the US. I'd love to spend some time to talk about Evofem on a segment, if we can next week.
Okay. Perfect. Yeah, I think we went a little bit past the timeline here. We're at 50 minutes, and this is a long live stream for us today. Okay, so next week we're going to catch up with you. We're going to be talking about Evofem and maybe other news that you have out there. Again, Amar, thank you for joining us again for the update. Again, I think more people will understand the stock. I think obviously we'll see some big things happening. And thank you for all the great questions, everybody joining us, and we'll see you all next week.
Thank you, Jack, and thank you, everybody. See you next week.